the FMCG Index has been one of the top sectoral gainers on a year-to-date basis, outperforming the Nifty 50 Index. We spoke about as well how Britannia and ITC have hit their 52-week highs. Let's find out what the trajectory is for the FMCG Index, and we've got Vinnii here who tracks that space closely, joining in with the details. Vinnii?
Good morning, and obviously, the FMCG pack has been those outperformers, outmovers coming in, and it's a defensive play coming in as well. So when you look at just the growth that is seen on the YTD basis, FMCG index has grown 12%, while the Nifty 50 has just grown 0.71%. So look at the gains that we're seeing coming in from the FMCG index as well. Varun Beverages are one of the likes names. ITC obviously has been those outperformers coming in over there as well. Now, obviously, this is the best start that we see for the FMCG index since 2017, and gaining for 5 consecutive months is what we have seen coming in for the FMCG index. Currently trading somewhere around the 38 times the 12-month forward PE as well. Obviously, we'll be keeping an eye out on that. But what are the triggers? What is actually happening in the FMCG space that you see actually leading to that growth? And obviously, when you look at it in terms of weightage, that has also increased in the FII portfolio for the FMCG index. So what are they liking in here? When you look at it, FMCG players have actually, cut down their ad spends when you look at it, especially in Q4, and that has started improving the margins of the company. Raw material prices, let's not forget, that has also cooled off a lot for FMCG companies. Apart from a few raw material prices, other than that, we've seen a cool off coming in most of them, and that is supporting the margins of the company. So gross margins expansion we saw this quarter as well, and we could expect that going forward as well. Rural growth, which has been a bit subdued in the last 1 year, that has started seeing a recovery coming in as well, and especially the packaged food companies. This time we've seen that outperformance coming in from Nestle, outperformance coming in from Britannia in terms of numbers, because packaged food started doing much better in terms of performance, because that was the trend going on this time around. Now, in terms of what are the levers going forward for the company, raw material prices coming down, increased focus on premiumization, that leads to better margins for the companies. Drivers for growth margins, EBITDA margins especially, is deflation, key raw material prices coming down. The value and volume growth. Price hikes were taken because of the inflation. Now that value volume growth has started coming down as well. The gap is reducing as well. So that could be a lever. Price cuts could be there. Grammage cuts could be coming in as well from the company. So that is a positive sign that we are keeping an eye out on as well. Distribution expansion. Britannia has focused on that continuously as well. Nestle has spoken about capex plans, including more in rural areas, tier 2, tier 3 cities. Distribution, that is an important factor, as well as improving rural growth, are key triggers that could come out for the FMCG companies going forward. Now, what are the risks? Do you think this is overdone? That's a factor. Now, risk for the FMCG company would be if rural markets do not recover on time and if there's a slowdown in the rural markets. Other than that, when you look at it, monsoons. Obviously, today we have the IMDb coming out with their report on June, how are the monsoons look at, but erratic monsoons are a big concern that come in for the FMCG industry as well. And competitive intensity, that has been increasing as well. So do they need to spend more money in terms of ad spends? If they increase their ad spends more than expected, then margins could again see a bit of a decline. So how that pan out is a key risk that we should watch out for. And in terms of valuations, let's look at the valuations that are there. We've compared the 1-year forward PE valuation with historic valuations. When you look at it for Nestle, still below those historic valuations, HUL2 around those historic valuations level, and peak valuations still below those peak valuations as well. So yes, that's the value coming in as of now for FMCG companies, still below those peak valuations.
Okay, Vinnii, we leave it at that. That's about Nifty FMCG.